So basically right now we are trying to analyze how does Rick does its analysis. So basically right now we're playing on very fast speed, just so that because he started around 2 minutes ago. So right now he's placing the blue lines and then he's looking for the most touches and then the major reversals. So you see that he's trying to adjust his blue lines so that more of the turning points and critical levels are being touched. So right now is you can see he grew the high and he's trying to adjust this line so that he can find find a line whereby he thinks is significant, and then he's doing for this center line now. I'm gonna try and take a look whether he is making any commentary on his. I'm gonna try and see whether he's making any commentary on his chat. Yep, he's not making any commentary. And then after that, he'll be drawing the. You can see that he's doing dotted lines. So these are the swing highs. Are these mini levels? Oh, these are the in-between levels. Okay, so basically it seems that he will draw major turning points, and then he will try to divide the major turning points into half with his dotted line. Oh my gosh, there's so many idiots laughing in the chat about him losing money, but let's just see. Okay, and then as you can see, he drew these lines, and then I think he's showing how he derived his lines from the beginning, and then he's referring to his past chart, and so far he came up with the center lines already. So these center lines, they can be considered as center lines, but they can also be looked at in terms of lines whereby price has made significant rejections. So price rose above it, bounced off it, price dropped very aggressively down, and then managed to close at this price. So it dropped down aggressively and then starts the new day at this price again. So this is what some people used to do to find significant levels. So I'll be pausing the recording until he does anything new. But right now I think he simply derived these blue lines. And then now he is adding in his trend lines. And then let's observe how he decides to place them. So basically I think he put once, and then based on the recent trend line break, so price from here dropped down, bounce, he made a trend line break, and he saw how the price was. I'm just checking whether he had any sound on, but he will draw a trend line that he thinks is causing significant bounces, and then after he drew it, he will, using the same angle, he will adjust it to find other matches. And then he tried this angle, and then he tried to drag it over here to see whether that particular angle was in any way influencing this particular in any way supported the price going upwards. And then after that he started trying to draw this angle, and then he drew it down here to see whether it supported other angles. So basically he's just trying to find a particular angle that he thinks is of significance, and then he will just clone it. He will just drag it around and then check. So as you can see right now, he's just checking the levels whereby he thinks prices react to and climb up. So basically the thing about trend line that most people do not understand is they kind of represent speed of climb. So basically what the speed of climb means is that as long as the price is above this particular line, it just means that the price is moving above this rate of growth. So basically the moment it starts dropping below means in a way it is dropping too fast. So basically it is a way to look at it if you kind of understand how speed and velocity and acceleration works and everything. So basically this is something like the speed, that assuming the speed is constant, or faster, the speed must be the price cannot be rising above, cannot be dropping below this the trend line that was drawn. So basically he's still doing the same thing. He's drawing like the trend lines which price respected in the past while they were going up, and then he's just dragging them around to see whether or not they still have any form of reference now. And then based on that, you will see that he will clone a lot of these lines. He'll clone a lot of these lines afterwards. If you go back and look at his normal charts, you see that he'll clone a lot of these lines, and then they're all parallel. Okay, so basically he's probably gonna use the yellow lines for the upward growth, and then he's gonna be using the grid ones for the downward angles. So now he's referring to his previous drawn chart. And then sometimes if your chart gets a bit too cluttered, it is not a bad decision to want to review and redraw everything to see whether you're missing out on any details, or like whether or not you have been too tunnel vision onto certain things. So I guess that is what he's trying to do right now. Either that, or he's trying to teach some people how to do his technical analysis. Okay, so he started cloning it, and then until he make any further progress, you will see me pausing it and letting it go. So you can see he cloned everything already. Now I'm still very curious about dotted lines. So basically, my first analysis is they could be minor levels, because you see the price came over here, dropped down, got supported by it, and then price dropped down, climb up again, dropped down, got supported by it again, dropped down again, got supported by it one last time before dropping down. So basically these are former support levels. So if you subscribe to support turning into resistance, next time around if price is to reach this level, there could be a chance for a rejection. Either that, or my guess is that he's thinking that this one is in between marks between his major lines, but I don't think that is a thing to bother to do, but it is just major and minor levels. So he's trying to do the opposite. So he had his upward trend lines already. I think he's trying to do his downward trending lines, but he's using a different color this time around. So same thing, he's trying to find major angles, and he will clone it. And then the next thing that you notice is that he has this kind of purple triangles. So the way his purple triangles work is that he will identify he will identify some form of trend line that wedge that he think that price might break out of. So he will plant on the top, and then he will link it all the way down to the bottom. So basically he's connecting this particular high over here and this particular high over here, and then he links it all the way down here. So basically whenever you see he tends to get a bit bullish when price is popping above this particular level. Of course he used other technical indicators too. And then the other side of the triangle, he'll be planting it against his upward trending line. So basically he will be observing some form of wedge, whereby he will draw his downward slope line, and then the other end of the triangle will just be his one of the cloned lines that he drew previously. And then now he's doing all the even minor levels. So instead of doing major lines, you can see that he's doing support resistance zones that you think that price might react to. So in this case, you see price came up here, dropped down here, got supported here, bounced up here, dropped down here, supported here. Then when price dropped through this whole thing, it came up and then banged against this former support, which became a resistance, and it dropped down again, and it go up again. So basically this is a relevant line that he thinks that next time around if price is to come back to this level, there could be some form of reaction. Likewise, if you see price was having trouble getting above this orange line over here, but the next time around when price burst through, when price dropped down, it reacts and then the former resistance became a support. So if you just Google support turn resistance, you can figure it out. Okay, and then the next thing that he just added to his particular chart is Fibonacci levels. So basically he considered the price from this level over here dropping to this level as a major swing. So basically, if the price drop down to over here, as price goes up into the into the swing that it dropped down from, he's trying to find any form of reaction levels can that can be traded off of. So basically, imagine that you went 10 steps in this direction, and then price came out around 3.8 steps. That is where you expect some form of rejection, or maybe 5 steps and then 6 steps. Basically it's just trading Fibonacci. So basically he drew his triangles, he cloned his diagonal trend lines, and then he added in his Fibonacci, added in some support resistance zones, and then some major support resistance lines that he thinks is of relevance. So basically he uses a most touch line strategy. So if a line has been reacted to multiple times, he thinks that it's a strong resistance. So I'm gonna pause it until he does anything new. So this is basically one of his open charts. So as you can see, the things that he take note of is, do you notice all the red lines that are basically at the same gradient? So he just find one that he thinks is very responsive to, and then he just clone them across, and he just trades them based on, he just draw them and then try to trade them in some form of upward channel. So basically this one is a support resistance zone. So next time around, if he's thinking that price is being held up by it on the way down, so price got saved by it, got saved by it, got saved by it. So next time around, if the price is to come to this level, you expect this line to be no longer a friend but an enemy. So this line over here, in his opinion, my guess is it also coincides with the 61% Fibonacci. So I expect him to turn a bit bearish if price is to hit that level. So this triangle, the bottom of the triangle, basically is one of the gradients of the red lines, and then the top is basically just a wedge, whereby he think that if it breaks through, there might be some form of bullishness. So and then another look at his support resistance zone. So price came up here, dropped down here, got supported over here. Price dropped down over here, got supported again. And when price finally broke through, the next time around price came back to this level. He expects this particular level to be a resistance. So a former support became a resistance. Just Google support and resistance or YouTube for it, and then there's a lot of tutorials on how you can use it. So he just readjusted the line to make it more better fit, and then he's thinking that this one will be like a channel that he can trade in. So basically, whenever a price approach the bottom of this triangle, he might choose to get bullish, and likewise. So right now, his price is at a breakthrough level. So I'm assuming that he won't be all that keen on. If I were him, I won't be that keen on taking a trade until there's some form of bullish breakout. But for me, I don't trade breakouts, but I think Rick trades breakout, and then he gets picked by it quite a number of times. But let's just observe how he is going forward. So basically, he just confirmed one of the things. So basically, Bitcoin was sold at the edge of the triangle. So when price hits near the top of the triangle, he will try to do a short and everything. So if price reach the bottom, he will try to do a long. And he just confirmed. Hard to say which side, but we should see a big move when we break. So basically, Rick is pretty much he has some form of breakout trader within him. So if price normally breaks these triangles, you will see him try to do some targets aiming. So right now over here you can see that he drew that he was thinking that the price will react to this 61.8% mark, and then his take profit will be somewhere over here, whereby he think that it is a multi-touch support resistance line. So basically price came over here, got rejected, price dropped down here, got supported, and then price dropped down over here, got supported, price drop over here, got resisted, come up, got resisted over here, drop down over here, got supported. So this is a multi-touch support line that you think that price might reverse off of. So basically if you are trading, you want to buy at support and sell at resistance. So he's looking that the 61% mark would be the resistance, the Fibonacci level, and he's thinking that the support level would be somewhere here. So once the price hits here is where you think that he will start wanting to exit his position. So right now is he's using Fibonacci to find his target. So basically he thinks that the price drop over here, retrace to the 61% mark, and he's trying to find along from this swing to this swing, where should he try to take profit. So his first identification is basically the multi-touch support resistance zone. His second metric for taking profit would be he's thinking that this 61.8 level of drawn from this swing over here to over here would be some form of support. So basically if you're shorting and then when you reach support you become bullish, that is when you try to close your trade. Okay, I think I'm done with this video. If there's anything else I'll probably add to it, but right now this is basically the analysis on how Rick does his analysis so far after watching him do it quite a number of times. So basically he's a combination of breakout trader and a range trader. So he will trade the triangles as some form of range, and if he breaks out he will flip direction and get bullish. And then he relies on Fibonacci a lot. He uses support resistance zones a lot also.